All right, I guess we're rolling. Hey guys, how's it going? This is Hala Pablo. We're going to continue our Traumatized token series. Today we're going to look at Cardano. Cardano's another one. One of those lucky coins, lucky tokens that have been targeted by the Securities and Exchange Commission as a security. The reason it's been targeted as a security is because it poses a threat to the overarching financial system of this country, the centralized, I should emphasize, financial structure of this country. But as you know, the times, they are a-changin', and I'm an ardent believer that decentralized finance is the future of finance, and Cardano's a big player in that. It's a key player, I believe. And so, yeah, it's natural that the SEC is going to come down on it with both guns blazing and try to take it out of the game. And so, but first, before we look at the technical analysis, I don't want this video to go on very long. Let's look and see just what is Cardano. What is Cardano for those of you who may not know what Cardano is? Just in a nutshell here. I'm not going to really go in depth. You can look at it. You could look it up on your own. But Cardano's a blockchain platform that's founded on peer-reviewed research. You could basically create smart contracts on it. If you're a business, if you're getting into the whole Web3 arena, or you want to go into decentralized, whatever, it runs. These things run off of smart contracts, which are programs or code within the blockchain. And Cardano is basically, it's a platform for which you can build your own systems, your own decentralized system. But what really has caused the SEC to come after it is this: Cardano actually does the things that we're always wanted to do in cryptocurrencies, which is to build a financial operating system for people who don't have one that can actually compete with a global financial system. Yeah, them's fighting words, you know, for Uncle Sam. Them's fighting words. And so it should be no shocker that they're going to come out and they're going to start harassing it. Anything that has anything to do with a financial application, decentralized, it's open season on them right now. So now the developer, the dude who created Cardano, also, I guess he was also involved in Ethereum. And so this guy's no spring chicken, and he is outright just refuting what the SEC is claiming. And he's saying there's no way in hell that that Cardano ADA token is a security. And here he's going on. So they're fighting it just like Ripple, just like, you know, all the others right now that are in the crosshairs. They're fighting it, and they're saying that there's no justification for these allegations by the SEC. But, you know, it doesn't matter, because the whole reasoning behind the accusations to begin with is to create volatility, is to create FUD, fear, uncertainty, and doubt, and get in, you know, like investors just don't want to deal with it. They don't want to deal with this shit. So what do? They dump their bags. They get out, and then the price drops, and then centralized exchanges like Coinbase and Binance or whatever, they're threatened outright by, you know, intimidated by the government, saying if you continue to list this unregulated security, the security which is unregulated, therefore illegal, we're going to sue you. So what happens? A lot of times they get delisted or suspended, and that causes a lot of people to freak out and take their money out of the crypto asset, which causes the price to fall. And that's the whole idea behind it. They want to traumatize these tokens so that when they get time to roll out FedCoin or the CBDC, that there's going to be more trust in FedCoin than there is in Bitcoin, than there will be in Bitcoin or Ethereum or Cardano, or, you know, XRP or XLM or any of these things that have undergone deep trauma because of the gaslighting by the SEC. So that's their end game, just to instill uncertainty in it, to cause the volatility, to make it look, so then they can say, look, see, you're better off putting your money in good old Uncle Sam, good old USD, than in this crypto stuff, which is highly volatile, and you could lose your shirt overnight. So anyway, so that's all I'm going to say about that. Let's go ahead and look at now the technical analysis and be done with this. Okay, where did my chart go? Okay, here it is. Okay, so What happened? Here it is. Here, we'll bring it back. All right. So here, just did a basic. You know, you could do Wyckoff on all of these. This is what I did. I'm looking mainly at the volume metrics in this. So what I believe is that we are in another redistribution range. I believe we're all in redistribution ranges right now, all crypto. We're in a bear trend. We are in a bear market. I don't care what anyone says. I think Bitcoin's in trouble. I think Bitcoin is it's dumped again. It's coming out of its macro rising wedge, which is bearish, and there's more blood on the forecast, and it's going to pull down a lot of these alts like Cardano along with it. And I'm thinking Bitcoin is going to go back down to 20,000, possibly even it's going to remitigate the 16.5 lows and possibly even go lower than that before we begin to see any kind of macro reversal, anything to write home about. So, but right now we're talking about Cardano, and I have this on the 6 hour. Cardano is still listed on the Coinbase exchange. How are we doing? 6 minutes? Okay, we're good. So here we have the selling climax, the automatic rally, in a series of secondary tests, and we could see like a loose trend coming down. It's kind of like, we'll call this the micro trend resistance coming down this dotted yellow line. It's a good habit. The way I trade and the way I analyze stocks and crypto is every time the price action touches a micro trend or macro trend at that, but right now micro trend resistance, it's a very important, it's going to tell us a lot of things where it touches down, because that's where we look at the volume. We go down and look at the volume forensically, and we try to get an idea of what the market makers are doing. And I'm seeing a lot of supply in this. You see like a buildup of supply here. Let me get a little brush so I can show you. See these, we have predominance of supply down in the vertical bar volume. Even though the price action itself is on a decline, but the supply is increasing. So that further confirms the bearish bias in it. Every time we see the price action hitting a crucial junction, like for example this, we have trading range support here, where the same line where we began the selling climax right here would be a key juncture. If this were going to accumulate right here, you'd want to see a bunch of volume. And we did get a volume spike, but it didn't go anywhere. So the effort versus result, there's a lot of effort, but very little result, which culminated in a failure to rally, and it got rejected off trading range. It became resistance at this point. It flipped it to resistance, and then the price action came back down to here. And then here we have a common floor with a 1, 2, with a 3 bounce floor. So this is an area here where the market makers are not willing to go lower. But here you want to look at, again, what the price action is doing, what's going on with the volume. And we have very, very low demand when it touched down here. Right here we had a little volume spike. We had a larger than average volume spike. But if you notice, demand, even though we had this, we had this Elliott wave that came up here, demand overall is still decreasing. You see, and I drew this decreasing of demand. So we have basically divergence in price action going up, but demand volume going down. That's also bearish. That's also a bearish confirmation. And then here again, where the price action again is hitting the micro trend resistance, we're seeing predominance of supply coming in. We're not seeing any efforts to rally. We have a failure to rally here at this point. You see, it just didn't, we have a very large wick on top, an upper shadow, which also denotes bear power. And then here we have a very large supply volume bar, and it took it right down. We have the correlation between price action and supply. And then we have overall overarching supply predominance. So we have low demand at this new floor, and then we have supply predominance as the range progresses on laterally towards the confluence of this trend. And so technically we're still in this range, but we're reaching the apex of this descending triangle. So when we reach the end of this triangle, I'm expecting maybe we might see like a pump right at the end. If we do, it could come up and remitigate this area here where the selling climax is. That would bring it up to about 43 cents. But then I'm expecting more downward price action as we break through. And then these Fibonacci retracements are areas where if you were wanting to DCA in Cardano, this is not financial advice, but if you wanted to DCA, I would definitely start DCAing anywhere under 23 cents. So that could take us down to the 1.272, which is 11 cents. And then if Bitcoin continues to fall, we can just we can assume that this is going to go down along with it, and then we could even go down to the 1.414, which could be 5 cents. I don't know if we're going to get that low. That would be crazy, but you know, I'm not discounting anything at this point. With crypto, I think there's a recession coming, and there's going to be a lot more FUD. And I don't think the SEC is done with this. There's going to be more lawsuits coming, and it's going to come against coins with a definitive financial application in the decentralized universe of the future, which is going to be extremely adversarial to the centralized CBDC Fed coin that they're going to bring out, that they're going to roll out at some point. So they're setting the stage right now. But there's nothing they could do to kill this. They can't kill these cryptos. They can only delist. They could just harass them and tie them up in court and just prolong the fear. But at some point, these are going to come back if it's projects that are going to survive, and investors are going to survive. Like in XRP, they did everything they could to come against XRP, and then XRP won a favorable judgment just recently, and it you know, it rallied. It showed that there was still demand in it. It's come back down since, but people are not giving up. That's the point. And so there's going to come a point where they're going to release the floodgates, and these are going to go back up in the next bull cycle and rally. And the deeper you can get them, the better you'll be. The deeper you can dig in, the juicier it'll be when it rises. So that's what it's all about right now. No one has a crystal ball, but I'm hoping for the best. You know, I'm just like in the same boat as everyone else, just going off what the metrics are telling me and the signs of the time. So that's all I got. I hope this was fruitful, informative, and if you liked it, thumbs up, subscription. Yeah, you know the deal. And that'll get it on the algorithm, make it more prevalent for other traders to help them, especially newbies that need help, and then those seasoned traders that really don't understand Wyckoff or VSA. Hopefully these videos can really help you. All right, guys, I got to go. This has gone on too long, 2 minutes over. Oh, well, I try. Cardano's an important one, though, so I'm glad we spent a little bit of time on this. If you have any questions or comments, please leave leave me your thoughts down there. I'll try to respond to every single one of them. And yeah, be sure to check me out on TradingView. I'll leave a link in the description, and you can check out my chart histories, 80 to 85% win rates. I also run a small private trading group on Discord where we bounce ideas off each other, and I share a lot of charts that I don't put on TradingView and I don't share publicly. And I can also analyze your coins if you have like special requests and all that. But I do all that through my trading group. Otherwise, I would never have time to do anything else. So, all right, guys, got to go now. Take it easy. Happy trading. Stay safe. We'll talk to you soon. Bye-bye.